Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the CCI Pro Traders, and our website is www.dayprotraders.com. The title of the video is Learn to Master the CCI Indicator Step 4. In this video, we want to teach traders how one can master the oversold CCI from a different angle. All right. So in step 2, we know that when the CCI is oversold, the price is also tagging the lower bound of the corresponding Bollinger Band. In step 3, we also learn to understand that when the CCI is oversold, the price is at a support level. In step 4, we want to be able to identify the best oversold CCI trading setup. All right? So do not get confused, all right? Each video is unique and is explaining to traders a specific aspect of a CCI indicator for day trading and swing trading purposes, all right? Here, I want you to understand something. So we know that when the CCI is oversold, the price is likely to be at the lower bound of the corresponding Bollinger Band, okay? But the most important thing, which I do not want you to forget, all right, is that whenever the CCI is oversold, the price is at a support level. So from today onward, as a master CCI trader, you should understand that CCI oversold is the price of the financial instrument is at a support level, either horizontal support level, either a dynamic support level. A dynamic support levels are moving averages because they are changing and moving up or down. So dynamic support and resistance level are moving averages. Static, okay, support and resistance level are the horizontal support and resistance level. The trend line also is a dynamic, okay, support and resistance level because a trend line can go up, okay, or down. So we have a dynamic trend line, is a rising trend line, which is the orange line here, and also a dynamic okay, support and resistance level, which is the red line here because it's rising. So when we are talking about dynamic support and resistance level, trend line and moving averages, okay? Static support and resistance level, we are talking about horizontal support and resistance levels, all right? So we want to be able to identify the best oversold CCI, okay? This is step 4. So you can see on this chart, I draw the orange trend line. How did I draw that orange line? Okay, I join this point. You see the orange spot here. I join it with this point here. So with these 2 points, I was able to draw my orange line. So we are waiting for the price to retest. So the price going up to retest the rising channel, the rising trend line. Okay. But when a price is retesting a rising trend line or a rising moving averages, okay, the price must display first a higher high. If the price did not display a higher high before retesting a rising trend line or moving averages, okay, though it's still a bullish trade setup, we need to be cautious. But the best bullish trade setup will appear when the financial instrument display a higher high before retesting, okay, the trend line or the moving average, the rising trend line or the rising moving average, okay? But this is just a trading setup, okay? We will not just go and buy straight away. We will use a multiple time frame trading method, a top-down trading method, and we will not ignore the economy news. So we will acknowledge that the price. So you see here, so I've drawn my orange line by joining these 2 points. Now the third time, the price retesting the orange line. I will look on my left-hand side to see whether the price has displayed a higher high. Yes, a little bit, not too much, you see. This is not a significant new high, okay? It's not significant, okay, compared to the previous high. There's no big difference, okay? So in this case, I will say, all right, but again, pay attention. I will also monitor the size of the candle. So the price was going up, the size of the candle is very tiny, you see here. So when we're looking at the candlestick bar and the size of the candlestick bar is tiny, what is it telling us? It's telling us that the volatility is low. So when is the volatility low? During the consolidation period. But there are different types of consolidation channel. One is completely horizontal. Sometimes you may see a rising channel, but the price will be consolidating within that rising channel. By checking the size of the candlestick bar here, it's clear to me that the volatility is low, that though the channel is rising, the price is consolidating within the rising channel. This is a special consolidation that is taking place in the rising channel. Gently, low volatility, the price in the rising channel. So here I will be a little bit cautious. The point I want you to understand, oversold is equal to what? Support level. Support at a static support level, support at a dynamic support level, either a rising channel or a rising moving averages, okay? Here you can see it's retesting a rising trend line. The CCI is not in the oversold zone, which the oversold is minus 100, okay? See, it's at a minus 67. In theory, repeat, in theory, the oversold CCI means that the CCI is below minus 100. But I want you to forget that completely. Forget that, okay? What I want you to remember is that CCI is oversold. Forget about being below minus 100. Practical trading, the significance of CCI being oversold, practically speaking, means that the price is at a support level. So though the CCI was not below the minus 100 level, it's oversold here. Why? Forget. You remember what I said to you to forget? Though it's not below minus 100, the price at a support level. So we can say here that the CCI is oversold, which a lot of traders may think that, George, are you out of your mind? But we know better, because oversold CCI means that the price is at a support level. We forget about the theory that says that the CCI should be below minus 100, though it is not below minus 100. It is oversold. Why? Because we know the meaning of oversold, the price at a support zone. So here, as you can see, the CCI is not below minus 100, but the price at a support zone. Yes, the CCI is oversold. All right, practically speaking, it's oversold because the price retests in oversold zone. So at this point in time, we will use a top-down trading method to trade this. So this is a setup. I'm on a 2-day chart, for price line group. All right. So the price retesting this point in time. This is a bullish trade setup. It did not display a significant high before retesting the rising trend line. I'm aware of it. I will be a little bit cautious. Now I will use a top-down trading method to trade this trade. I will also go to Google Finance to perform the Google Finance seed test. All right. Whether I am day trading or swing trading, I want to know the current economy news that are affecting price line group or the financial instrument that I'm trading. The next thing that I want to know, I will also pay attention to the market leader. This is about the trading triangle. Is the market bullish? If the market is bullish, I will give priority to my bullish watch list. I will focus on financial instrument, or I will focus on the bullish trade setup. If the market is bearish, I will ignore this trade setup. I will focus instead on my bearish watch list. It makes sense? It makes sense? If you are a new trader, replay the video. Check our video about Google Finance Assistant at George Trio channel. And also check our video about the trading triangle at George Trio channel, okay? You want to understand this and use it properly. So ordinary traders, average traders will go and buy straight away here. Here it worked because it went up. But the best approach to manage the risk All right, and to trade like a professional trader is to use a top-down trading system and also to pay attention to the economy news. So here, though the CCI was not below negative 100, the price at a support zone retesting a rising trend line. So in this case, we are combining the oversold CCI with a rising channel or a rising trend line or a rising moving averages. Price display a significant high or displaying a high before retesting a rising trend line, a rising channel, the lower part of the rising channel, okay, a rising moving averages. Though the CCI may not be below the minus 100, it is oversold because the price is at a support level. It makes sense? Here it's oversold, it's a bullish trade setup. The CCI is not below negative 100, but it is oversold because the price is at a support level, retested a rising trend line. Here we are combining the CCI indicator oversold condition with a rising trend line, a rising moving averages, or a rising channel. Here, a day trader or a swing trader will implement the trading drill and pay attention to the economy news. As you can see, this is on the 2 days chart, for almost more than 10 days, the stock was going up. Okay, if the market was bearish, I will not trade this. The market is represented by the S&P 500. If the market was bullish that day, I will trade this. All right. Here again, I draw another line, drawing another rising trend line. Joining this time, you see where I put the yellow line. The first point is the first yellow line here, the sports you see here. And the second point is this one here. Price went up and pulled back. With these two yellow line spots, I can draw my new rising trend line, which is the red line here. I'm waiting for the third time the price will retest that red line right here. You see, it pulled back, retesting the rising trend line. After displaying a significant high, this is a bullish trade setup. Trading drill, multiple time trading method or top-down trading method without ignoring economy news. If the market that day when I'm about to day trade or swing trade is bearish, I will put this one aside. I will concentrate instead on the bearish trade setup, and I will focus, okay, on bearish trade setup. If the market is bullish that day, then I will be happy to trade this. Though the CCI again is not below negative 100, it is oversold. Why? Because the price at the support zone. Here we have another opportunity here. Price came very close to the red line. Again, it's a bullish trade setup. Again here, though the CCI was overbought, almost overbought. Here you see it was overbought. But in theory, talking about the CCI indicator itself, the CCI indicator itself is overbought. But the financial instrument is oversold because the price is at a support level. This is a bullish trade setup. All right. You see the CCI is hanging in overbought zone, but we have a bullish trade setup. You see here the CCI is pull back a bit and change direction here. This is oversold condition. Though the CCI itself is not oversold, it's not below negative 100. The price at a support zone retesting a rising trend line. We can buy when other financial market traders are selling. We have an edge, and we know how to master the CCI indicator. It makes sense? Here again, price pull back again to retest on the edge. Trading on the edge, check stochasticmarket.com, trading on the edge, pull back again, touch it here. It's a bullish trade setup. We wait for this day. The candle is closed. The market is closed that day. All right. The next day we are watching it. Is the S&P 500 bullish? All right. Okay. If it's bullish, we can trade this. If it's bearish, we put this one aside and concentrate on our bearish watch list. We can use this for day trading, swing trading. All right. We can apply this strategy on any time frame. 4-hour chart, hourly chart, 30-minute chart, 50-minute chart. So if you are trading oversold and overbought CCI on the 50-minute chart, please do me a favor, draw the trend line and trade like this. Again, if you're on a 50-minute chart, you can use the 50-minute chart as your trade setup and go, for instance, to the 3-minute chart, okay? Wait for the price to break out of a channel or something like that, okay? And then you use like a 50-minute, 3 minutes, and then 50-minute, 3-minute time frame, and then 1-minute time frame for your entry. Break it down always, all right? See, oversold here, so we can apply this strategy on any time frame. Here you see, this will allow you to avoid trading mistakes. So do not buy straight away because it's retesting the trend highs. You see, you pull back. Use a top-down trading method. This will allow you to manage the risk because if the signal fell, you will see it when you are applying a top-down trading method. But if you just buy, you see here, it went up a bit, it might come back down here. So apply it, pay attention to the market itself first. Is the market bullish? Concentrate on bullish trade setup. This is very, very important. And apply the trading day. You want to swing trade, all right? Perform the Google Asset test, pay attention to the economy news and the market itself. Okay, this is how one can master the CCI indicator. This is the end of this video about learning to master the CCI indicator. Step 4, talking about combining the oversold CCI indicator with a rise in trend line, a rise in moving average, or a rise in a channel to filter out the false signal. I hope you have learned something from this video also, and we make an excellent decision. Though the CCI did not dip below the negative 100, okay, the price at a support level, we want to forget the theory and concentrate on the practical trading tips, that trading strategy that we can apply to make excellent decisions. Until the next time, enjoy yourself and be very happy. We are the CCI Pro Traders talking about learn to master the CCI indicator. Step 4. I invite you now to follow me in the next video when we will be talking about learn to master the CCI indicator. Step 5. In that video, I will be talking about the overbought CCI, again from different angle, how we can combine the overbought CCI with a declining channel, a declining dynamic support or resistance, the declining resistance level, okay, using a top-down trading method. Until the next time, enjoy yourself and be very happy. We are the CCI Pro Traders. Speak to you soon.